British American Tobacco is eyeing an improved second half performance, particularly from its new category and combustibles units. That forecast comes as it ramps up its investments in the United States. CEO Tadeu Marroco has added that BAT is on track to deliver its 2024 outlook, which is targeting a low single-digit adjusted profit from operations growth, and that it's making progress towards becoming a predominantly smokeless business by 2035. Libstar says trading conditions have improved. The firm, whose products include lancewood and dedi mushrooms, has shared a pre-close trading update. Year-to-date revenue for the period ended November 22nd increased by 2.5%, and that's despite a near 3% decline in volumes. More detail will be provided when Libstar presents its annual results in March. South Africa's inflation rate has edged slightly higher. It registered an uptick to 2.9% in November from 2.8% previously. This marks the first increase after 5 consecutive periods of easing. Prices were softer for transport costs and food prices. A key component of household spending eased further. Stats SA says inflation for food and non-alcoholic beverages dropped sharply to 2.3%, marking the lowest rate in nearly 14 years. South Africa's tills were ringing in October. Retail sales for the period surged 6.3%. This is the 8th straight month of growth and the strongest level in over 2 years. According to Investec economist Lara Hodes, 6 of the 7 categories included in the retail basket increased. The laggard was the hardware, paint and glass category, which has consistently underperformed over the past few years. The Maputo port closure is costing South Africa 10 million rand each day. That's according to the Road Freight Association. Its CEO Gavin Kelly says 6 million rand relates to direct losses for freight logistics providers, and the balance is lost in other sectors who rely on road freight transport through the corridor, with the mining industry being particularly vulnerable. Kelly has called on South African authorities to step in and help Mozambique resolve its civil unrest. Protests on the Mozambican side of the Limpopo border post have been ongoing since the 24th of October, which is when the results of the country's disputed elections were released, and that unrest has led to the closure of the crossing several times since. Zara owner Inditex has missed a third-quarter profit expectations, but it says the holiday shopping season is off to a good start. Here's more detail in this package report.
Inditex posted a rare miss on quarterly sales and profit. Third quarter sales at the Zara owner hit $9.84 billion, but that was below analyst projections. An 8.5% 9-month rise in net profit to $4.6 billion also failed to meet expectations. Inditex said severe floods in Spain at the end of October had a very limited impact on the company's performance. It also blamed a strong dollar and weak euro, as Inditex makes most of its sales in the euro. Shares have risen close to a third this year, but dropped back 6% in early trading Wednesday. However, it wasn't all underwhelming news for Inditex. The retailer said the holiday shopping season had got off to a good start. It said revenues were up 9% in the 6 weeks to December 9th, although that was slower than a year ago. The company further said it believed it was on a growth trajectory. Zara has been investing in larger stores, logistics centres and marketing. That as it tries to stay ahead of fast fashion rivals like H&M and Shein, which sell at lower prices.
Sticking with international company news, General Motors is set to end robo-taxi development at its majority-owned cruise business. This is a blow to the ambitions of the largest U.S. automaker, which had made the advanced technology unit a top priority. Here's more detail.
General Motors is giving up on its cruise robotaxi business. The auto giant said that it would end development at the loss-making unit, which had once been a top priority. GM said too much time and resources would be required to make Cruise a success. It also cited an increasingly competitive market for driverless cabs. The company has spent over $10 billion on Cruise since 2016. Only last year, Chief Executive Mary Barra had predicted the unit could make $50 billion in annual revenue by 2030. But on Tuesday she called it expendable. Now the technology won't be abandoned, but will be folded into GM's unit working on driver assistance systems. There was no word on how many Cruise staff would be able to move over to the parent firm. The change comes shortly after GM scaled back its plans for electric vehicles. That saw it restructure its China business and sell its stake in one battery joint venture. All that left the firm focused on the more profitable business of making gasoline-powered pickup trucks and other large vehicles. Among rivals, Ford began winding down its AI-driven cars unit 2 years ago. But Tesla boss Elon Musk remains bullish on autonomous vehicles, having recently unveiled his firm's proposed future robotaxi. Meanwhile, Waymo is still set to expand. The Alphabet unit said last week it would soon start ride-hailing services in Miami and has recently raised billions in new funding.